Hi everyone, welcome to Decode Australia. Today is Wednesday, January the 27th, 2021. My name is Taima.
My name is Yvonne.
And we're going to be starting with the pound yen analysis.
The Great Britain pound rose against the Japanese yen on Wednesday, increasing the price of the pair to more than 142 ahead of the release of Japanese retail trade annual news.
Now this pair, the pound yen, is currently strengthening around the 142.34 level. We're looking at the chart, we can see the following resistance levels. Resistance 1 is the 142.70, a major horizontal resistance. Second resistance is at 143.20, the upper trend line R. Finally, the third resistance is at 144, even a psychological number.
On the downside, the price of the pair may face some critical support levels. The first support will be 140.74, which is the low of January 19, 2021. The second support will be 140 even, which is a psychological number, and the third support will be 138.99, which is the 61.8% Fibonacci level support.
Now the Japanese retail trade news. The Japanese Ministry of Economy is set to release these numbers for Japan's retail trade annual news later on today. And according to economists, Japan's retail trade reached a reading of 0.4% in December, as compared to a reading of 0.6% in the year before.
The stats for the Japan's retail trade reflects the total sales made by the retail sector of Japan. The figure is reported after taking account of retail sales made by different stores located countrywide. Retail sales include products such as merchandise and products related to general consumption and household. Not to mention, consumer spending is an important economic indicator. Generally speaking, a high reading is positive for the Japanese yen. However, it suggests a bearish market for the pound yen pair ahead and vice versa.
In conclusion, given the macroeconomic outlook of this pair, over the past few days, buying it around the current levels might be a profitable decision in the short to medium term trading. Now let's move on to the USDCAD analysis.
The US dollar inched higher against the Canadian dollar on Wednesday, increasing the price of the USDCAD pair to more than 1.2600 ahead of the release of US non-defense capital goods orders, excluding aircraft news.
Now this pair, the USDCAD, is trading around the 1.2692 level. We might come across the following resistance levels. Looking at the chart, we can see the first resistance is at 1.2783, a major horizontal resistance. Second resistance is at 1.2835, the high of January 11th. And finally, third resistance is the 1.2906, which is the 38.2% Fibonacci retracement.
And on the downside, the price of the pair will have some critical support levels. The first support is 1.2587, which is the key horizontal support. The second support will be 1.2500, which is the psychological level, and the third support will be 1.2426, which is the lower trend line arm.
So the US non-defense capital goods orders excluding aircraft news. The US Census Bureau anticipates releasing these numbers for the non-defense capital goods orders excluding aircraft later on this evening, January 27th, and according to economists, the US non-defense capital goods orders excluding aircraft news reached a reading of 0.5% in December, bearing no change as compared to the reading of 0.5% in the previous month.
The US non-defense capital goods orders excluding aircraft reflect the cost of orders placed with the manufacturers of capital goods over the given time. Capital goods are those goods having an expected life of 3 years or more. Because the production of capital goods involves huge investment, it is sensitive to the US economy. Not to mention, the figure does not include aircraft costs. Generally speaking, a high reading is seen bullish for the USDCAD ahead and vice versa.
In conclusion, considering the price movement of this pair over the past few days, selling around the current levels might be a worthwhile trading decision in the short to medium term trading. As always, when trading, trade with your head, not your heart. Only trade with what you can afford to lose, and please, as always, apply strict risk and money management techniques.
That's right. And also don't forget to subscribe to our YouTube channel, like our Facebook page and our Instagram at Forex Decoded.
Have a happy trading day. See you tomorrow.
See you!